Good afternoon, everybody. It's great to see so many friendly faces today. This is part of our Tuesday Tips, which was created by our mixed groups, which is the Middlesex Information Exchange. Something that kept coming up time and time again within these groups was, really costs, increasing costs of doing credit card transactions and all that stuff. And, I learned a lot about it because I didn't realize, different credit cards have different charges and just all those kinds of things, and especially during COVID. So we reached out to one of our CPA firms who actually got us in touch with Colby and Steven from Payrock. They're part of the Payrock team. So thank you both for being here today. Obviously, this is titled How COVID-19 has Changed the Payment Landscape and How I Can Take Advantage of It. So I certainly am not the expert in this field, but I'm very curious on what you guys have to say, because we do have many members who really have honestly seen the effects, especially with COVID. And all those little ancillary fees that do add up to a lot. So we appreciate you guys taking the time coming from the West Coast. So thanks for being here. So I'll turn it over to both of you.
Okay, great. Thanks. I'm gonna share my screen. So let me know, everybody, when you can see this little deck that I've got here.
Perfect.
We good?
Mm-hmm.
Yep. All right, let's actually put it in presentation mode here, if I can remember how to do that. All right. So hi, everybody. Thanks for having us. Again, my name's Colby Polson. I'm the Senior Vice President of Business Development for Payrock, and I've got Steve with me as well, who's one of our most tenured payment professionals. Been working with a lot of our CPA partners really for, gosh, it's been over a decade now. Yeah, Steve?
Yeah, right around there.
All right. And I've been with the company since 2004. So it's been a good 17 years now myself. But we wanted to talk about, well, payments, particularly how COVID has impacted the payments landscape. But, we're happy to answer sort of any just sort of general questions about credit card processing, fees, interchange, all that kind of stuff as well as we go along. Or if we want to wait till the end, maybe if people want to ask sort of, more general questions about the payments world that maybe we don't address in the presentation, please feel free. Just really quickly about us, who is Payrock. So we've been in business since 2004, since 1994. I've been with the company since 2004. We're headquartered in Chicago, actually, but I run our CPA practice, where we basically, we work, as I've mentioned, with a lot of CPA firms throughout the nation, both to service their payment needs, but more importantly for us to work with their clients and help them with their clients' payment needs, which is how we met you guys. So we're a top 10 payment processing company nationwide. This is just a little graph showing some numbers. In fact, they're a little dated now. We made an acquisition a couple of weeks ago that would actually bump this by roughly a third or so, which is good. I need to get my slide updated. But anyway, yeah, been in business since 94. We've got offices in Atlanta, here in Salt Lake City, obviously Chicago, Toronto. We've got one in Montana, one in the UK, Northern Ireland, Mexico City. So anyway, we're a little bit international, but we're mostly focused here in the US. And yeah, we do all things payments. So speaking of COVID-19, we've definitely seen in the last 14 months or so some pretty dramatic shifts in our space as far as credit card payments, especially, which is really what we focus on primarily. I've got a bunch of quotes here. I'm not going to go through and read all of them. And in fact, I'd be happy to send out this deck, after the presentation, if we want to. Maybe if we could just get an email list or something for everyone that was here, and then we can send it out, make sure that people have our contact info if they want to ask us questions, etc. But anyway, you basically see a conglomeration of executives from PayPal, Visa, MasterCard, Global Payments, et cetera, that are basically saying roughly the same thing, which is we're seeing a big shift, a big increase in credit card payments due to the pandemic, as well as some advances in some shifts from people moving obviously from more retail to more online. and getting away from cash and check at an even more accelerated pace than they already were moving. That seems to be sort of the principle, as well as some technology pushes. For example, we're seeing a big uptick in contactless payments, and we'll kind of talk about that, and things like that. That just people obviously are a lot more concerned about touching things, right? And so anything that you can do sort of wirelessly online without interacting with people, not having to touch anything, all of those things, as you would expect, are seeing, quite a big increase and uptick in usage. So just to get into the numbers a little bit, I'm actually going to move something here really quick. There we go. So I can see my own screen a little bit better. So the U.S. merchant acquirers, and that's what we are. We're a merchant acquirer, right? Have definitely, I almost hate to say it, but have definitely, in some ways at least, benefited a little bit from this pandemic. In that, since the invention of the credit card, I suppose, cash and check every year are getting smaller and smaller and smaller as a percentage of how people are paying, and COVID has only ramped that up significantly. You can see, over here on this graphic on the right side, estimates for 2021 are showing that check is going down to almost nothing, 3%, cash 17%, and everything else basically in credit and debit card as far as how people are paying. And of course, as a company that benefits when people pay with their credit card or their debit card, right? That's kind of good news for us. It's not always great news, we understand, for business owners. And we're going to talk a little bit about some things that you can potentially do to help save money. I'll leave that for Steve later on, so I get to be the bad cop and he can be the good cop. Despite the pandemic, like I say, payment volumes, what we saw a huge drop in March and April. In fact, we had sort of record low months last year, I'm talking about, so 2020, right? And you can see this little graph here. It represents kind of, I guess, a percentage of volume, processing volume that we saw on credit and debit as compared to the previous year. And so, in March of 20, if you follow the orange line, that's Payrock volume. And with 100,000 clients nationwide, I feel like we've got a pretty good pulse on, what we're seeing sort of nationwide for all businesses. We work with businesses of all types. So anyway, you see a huge dip there in March and then in April where we kind of bottomed out, but it really rebounded sharply in May, and then even in June and July we had record months. Surprisingly and happily for us, we seemed to even outperform from a percentage perspective, just Visa, MasterCard, and then the TSG line. They're just a competitor of ours, a major competitor. And so while everyone else seemed to kind of peak back up in May, but then kind of curtail back a little bit in June as maybe that second wave started coming, we continued to grow. And I think it's probably due to a couple of unique product offerings that we had, which again, we can get into a little bit, that focus on helping you find ways to save money. This is an interesting slide. So we have seen, a pretty wide range of decline or growth, depending on the industry and depending actually even on the state. So for example, if you look at the right side of the slide here, February volume, and this is 2020, but February volume declines, we were seeing big drops in Jersey, Ohio, actually Utah was one, New York, of course, though less than you might expect, only 6% down from the previous year. But Texas, Mississippi had big declines. But then in February, some states were again already sort of almost resurging and rebounding. So Illinois, New Jersey, Texas, California, New York again, and Florida, we were seeing big upticks. And then of course, one thing that's not too surprising, but industries obviously were sort of widely affected depending on the industry type, right? So for the most part, any sort of wants-based, I like to call them wants-based businesses, saw pretty big declines, but those needs-based businesses really saw surges for the most part, especially at the beginning of the pandemic, right? So grocery stores and things like that really their volume was hugely up. Whereas, some of the more sort of entertainment focused type businesses definitely saw declines. Like I mentioned, the pandemic is accelerating, cashless penetration in every form, essentially. So, again, I'm not going to go through all of these bullet points and read every one of them. You can kind of see for yourself, but the surveys that were conducted by McKinsey showed that buy online, pick up in store has grown 34% in the past 6 weeks, and this was from just a few months ago, with 59% of consumers intending to continue in the long term. And this is what I think is really interesting to me. So, according to this survey anyway, if you look at this graphic, you'll see that, buy online, pick up in store, obviously, you would expect at the beginning of the pandemic for that to be sort of more prevalent, right? But according to the survey, people are indicating that they're going to continue, long term using these sort of buy online, pick up in store, meal kit delivery things, safe and contactless checkout, QSR drive-through versus go in person. Who knows if people will sort of change their minds, right, as stuff continues to open up. But at least for now, indications seem to be that people are really sort of long-term planning on changing the way they shop, changing the way they buy. And so for us, we're constantly encouraging our own merchants that, hey, if you have thus far been retail only, you're probably going to want to really think about, finding new ways to accept payment from your customers and deliver your product and your services to your customers, or you're probably going to continue to struggle, at least for the short to midterm, if not, beyond that. So, if you don't have a website that's able to help you take orders, and you don't have a great system for, getting those orders and helping you track when they're coming in and how to get, deliveries out to curbside and all that kind of stuff that people are so used to doing now, you're definitely going to want to find a way to make that happen. And, we've got plenty of point of sale systems and, technology and things that can help our merchants to do that. But anyway, at the end of the day, I think it seems to be a trend that will continue for the at least for the near to midterm, like I say. As far as, other technologies that we're seeing, a big increase in, it's really the contactless, like I mentioned at the beginning. And when I say contactless, I'm talking primarily about like your Apple Pays and things, where you have sort of your credit card data on your phone and you can pull it up on your phone and then just sort of hold it near, the point of sale device where you're shopping, and that will, detect your credit card data, process the transaction that way. So you don't have to actually get the card out, slide it, be keying in a PIN number, all that kind of stuff. We've seen a fairly slow increase in contactless payments up until last year, where it seems to really, again, not surprisingly, I think, have surged, and the projection for the next couple of years is that it will continue to grow beyond, at a pace more rapid than we would have seen were it not for the pandemic. Again, not a huge surprise. But most businesses, it seems like, at least where I shop anyway, have finally sort of embraced this sort of Apple Pay, NFC, we call it near field communication, contactless form of payment. And for those who haven't, I think it's only a matter of time, and it's a fairly easy and not particularly expensive technology to be able to adopt, depending on your store, depending on what kind of equipment you're using, et cetera. But it's becoming more and more ubiquitous anyway. So with that, I'm actually going to turn things over to Steve, who's going to talk about a couple of sort of trends that we've been seeing to help that people are adopting to help save money. So businesses are adopting to help save money, surcharging and cash discount options. So Steve, why don't you take it away?
Yeah. So, as Colby mentioned, all of the businesses are looking at ways to adapt and change to the environment, the pandemic, all of these contactless and everything that's kind of been changing is helping businesses secure more business, help more clients, and really just survive. So what happens is a lot of business owners are looking at their costs, expenses, where they can mitigate some of these costs. And credit card processing, as many of you know, is one of the largest non-capital expenses that businesses have. So one of the things that has really been kind of gaining traction over the last few years is this surcharging. Surcharging was not allowed by Visa and MasterCard for a lot of years. And there's a lot of litigation back and forth between business owners and Visa and MasterCard about they should have the ability to surcharge a client. And finally, about 5 years ago, Visa and MasterCard kind of gave in and said, okay, we'll allow surcharging.
I would say they were forced to give in.
Well, I was trying to put it the nice way, but yes, by litigation,
yeah,
it was determined that they needed to allow surcharging if businesses wanted to do that. Now, since then, some of the states have actually stepped in and said, we don't want to allow surcharging. Our citizens don't want to be surcharged. We're going to pass legislation and not allow that in our state. So when this first kind of came to be, there was probably about 20 states, and Colby, you may be able to chime in. I can't remember exactly the number, but about 20 states or so that passed laws that did not allow surcharging in their particular state. Now, since then, those laws have been challenged and they've gone through the courts process. And really, it's been changed in all but about 4 states as of this year. So as we're talking about surcharging and some of the changes that have come with surcharging, there's still a couple holdouts as far as states allowing that. And those states, they do include Connecticut at this point in time. Mm-hmm. Colorado, Connecticut, Kansas, and Massachusetts are the only states that do not allow surcharging.
So congratulations to you guys for being, one of the last bastions of holdout here. Typically it's kind of a consumer protection is the way that the laws are sort of touted as. We obviously have some biased opinions on how much protection they actually provide to a consumer, but just to make sure that we're clear, when we're talking about surcharging, we're just meaning a business essentially saying, if you want to pay with a credit card, that's fine, but it's going to cost you an extra 3% or whatever. That's what's happening at a greatly increased rate throughout the nation, outside of those 4 states that Steve mentioned.
Yeah, so, and that's exactly the point. I wanted to kind of address that before jumping into the surcharging, because, as it changes in the industry, that changes by state to state. And at the moment, these 4 states, some of these trends are not following through, but we feel like it's going to be just a matter of time before, surcharging is allowed in every state, just because of the litigation in the previous states. We feel like it's going to continue moving that direction. So surcharging in general, as Colby mentioned, is just a business saying, we're going to pass on the cost to accept credit cards to our customers. And we're doing that by adding a fixed percentage to all transactions. Now, prior to 2020, it was a very small percentage of businesses that were doing this. It was starting to move that way, but really hadn't gained traction. Since April 2020 and the pandemic, we've seen an increase of, as you can see, over 330% in the number of accounts wanting to surcharge, which actually represents about 30% of all of the accounts that we do every month. So it's a huge percentage of the business, a huge percentage of business owners that are finding the value in passing these costs along. Now, you can see we kind of there's a number of reasons for this. Obviously, businesses are looking for any way they can save money. Again, they're trying to just survive this pandemic and the changes that have been kind of forced upon them. So that's one reason that businesses have decided to adopt surcharging. And then the other side of that is customers in general are looking for ways to help their local businesses. They're much more willing to pay a dollar or two extra to keep that mom and pop shop open long term. And that's kind of been one of the bright sides, as you're looking for bright sides with the pandemic and all the changes that have happened this past year, is you do see many stories of private citizens and individuals going out trying to help businesses or help people that are being affected by the pandemic, and that's really what we're seeing, and that's why we're seeing more and more companies that are adopting it, and the customers are accepting it because they want to be able to help in any way they can. If you want to go to that next one, Cole. So consumer choice is kind of the flip side to the surcharging. So what that is because when surcharging was originally released, and businesses were allowed to do it, but not in all states, we decided to come up with a second program for those businesses that operate in states where surcharging was limited, as well as in the states where it was allowed. So this consumer choice is a program that we developed that will allow customers to choose how they want to pay, and the price is determined by that method of payment. Essentially what will happen is a customer will go to pay at the check stand, and the technology, the terminal, will actually allow the customer to choose, here's the cash price, or here's the price if you pay with a credit card. Now, this is not surcharging because this is a choice by the customer, and it's not an amount added to the transaction. It's a discount that's applied to all transactions if they choose to pay with cash or check. So really, that's kind of the way that businesses are allowed to pass along the cost. If somebody wants their frequent flyer miles, that's fantastic. But they need to pay for those frequent flyer miles instead of the business. So therefore, they choose to pay the higher percentage. They get their miles, the business doesn't pay the credit card fees, and it works out nicely for both parties. Everybody's able to benefit from that situation.
Yeah, if I could just jump in real quick, yeah. Steve. Visa, MasterCard, and American Express, and Discover, for that matter, have never had any prohibition against charging less for cash. And it may seem like a little bit of a, we're just playing with semantics here, but it's always been okay to have a lower price for cash. It just hasn't, until a few years ago, been okay to charge more for credit card, or to add a fee if they want to pay with a credit card, right? And so you've probably seen this, especially it's been prevalent at gas stations for years, right? Where you'll drive by the gas station and you'll see two prices out on the marquee, right? One for cash, one for credit card. All we're doing with consumer choice here is essentially that same thing, but instead of forcing you to kind of go through and update all of your prices and update your, the tags on the, at every item in the store, et cetera, it all just kind of takes place at the point of sale. where, they'll have the item that they want to purchase, and then it will present them with two options essentially on the terminal. It'll say, okay, here's the credit card price, and then here's the discount that you get if you pay instead with cash.
Thanks for clarifying that. It's really something, like I said, for a lot of years, there was no surcharging allowed at all. And so the only option businesses had was to offer a cash discount, and that's why, that's probably, especially in fuel and those type of industries, they kind of embraced that early on and were able to pass along some of those costs, long before surcharging was allowed. So the nice thing about this and this consumer choice program is it's not regulated as far as Visa and MasterCard. They're perfectly fine with you doing that. It's nice from a standpoint that it's not like it's a hidden cost that just shows up on somebody's credit card receipt. It's a very clearly posted price that they will see when they're checking out. They can decide and make that choice, how they want to make that transaction complete. So that's really the beauty of it. If they want to pay with cash, great. If not, they can see what that difference is going to make to them. And the ability to have the machine actually do that, so the customer can see that, is really kind of the key to this program and makes it so much more user-friendly from a customer standpoint. So you can see here, there's an example of kind of what the display would look like at checkout. A lot of these machines that you'll see at the grocery store or retail shop, a lot of them have moved to kind of a touch screen type format or a little bit more detailed display. And so this is kind of what the customer would see. It would show the transaction amount of $10. And then at the bottom, they'll be able to select, do I want to pay cash for $10 or do I want to pay with my card for $10.40? Again, it's very clear. It's not added on to the receipt at the end of the transaction. There's no surprises. And it's also not forcing customers to pay the surcharge. If they're opposed to it, that's just fine. And that's what a lot of business owners are worried about when you're talking surcharges or adding an amount for processing a credit card to your customers. Business owners are afraid your customers are going to leave or not want to come back because of that. But with this program, you're putting all that, the decision on the customer. If they like it, great. If not, you move forward. And that's kind of why we've released the program. That's why it's been embraced by the community and the business owners, as well as the customers alike. So this is kind of the point that we've left for any kind of questions. Obviously, you can see my contact information there. Colby's available as well. But typically, I'm the one working with businesses on a day-to-day basis. So please don't hesitate to reach out with any questions. But if there's any questions now, we'd be happy to address those from the group.
Is there a limit to what percentage can be charged for those fees?
In the consumer choice model, there is not. You can set that amount, however you see fit. When we're talking surcharging, there is a limit. In surcharging states, it's only a 4% processing fee that's allowed to be added on there.
Yeah. 4% or less. And we're seeing most people who are opting to surcharge are doing so at about a 3.5% on average, I would say. Some will go all the way up to 3.99. Some will, go down to 3%. It's rarely lower than 3%, just because if you go lower than that, that might not actually cover your costs, depending on what kind of card your client is choosing to pay with. So.
Right. Okay. And do you have any idea? I mean, I suppose you don't know what a timeline would be for Connecticut, that the law might change.
Unfortunately, no. I don't have any contacts in the legislature out there, but and nor there may be somebody, frankly, at the company, I guess, that may kind of have their finger more on the pulse of these last few holdout states. But no, I don't know.
Okay.
And just to kind of give you a point of reference, I mean, the states that have made those changes and have started to allow the surcharging, I mean, we've been seeing, the vast majority of them dropping off in the previous year. So there's only been, I think last year there were 6 states, so now we're down to 4. So it feels like it's not going to be much longer before, these last holdouts will probably be allowing it. But,
I think
we don't have any legislation that we know of at the moment.
I think that as the precedent becomes more and more common, that states that did have laws against surcharging are getting rid of those laws, due primarily to pressure from their constituents, as far as we can tell. I mean, the business owners, are going to their legislators and saying, hey, I appreciate that you've kind of got this law in place because you think it's, protecting consumers from having to overpay. But what you're not taking into account is that you're preventing businesses from saving money, by doing this. And I think once they realize that, they move to make the change.
Yeah, I don't know if Connecticut will ever realize that. They're really good at pushing companies out of Connecticut. But we can only hope.
Yeah.
Thank you.
Yeah.
Hey, Laura, did you have a question?
Yeah, so what about alternative methods like Venmo and Apple Pay? Can you talk a little bit about those?
Sure. Yeah, Venmo is great. We do see, so let's see, we definitely see an increase in sort of this peer-to-peer payment, as we call it, P2P. Venmo obviously is leading the charge there. And we don't see, when you look at Venmo or even like Square, for example, they're sort of competitors, but we don't really think of them too much as competitors, because the target there, I think, is more primarily, anyway, for what we would consider like micro merchants. Our most of the businesses that we work with are kind of in the SMB space, but are processing anywhere from a few $1,000s a month to a few $1 million a month in credit card volume. And it seems like, out of interest of pleasing their consumers, most businesses are still continuing to have sort of more traditional forms of payment acceptance for credit cards and things like that. That said, yeah, we're definitely seeing an increase in those P2P and Square-like providers out there. And we do have, products that, for example, will let you process a transaction on your mobile phone, be really easy to set up. You could even plug in a swiper or have like a Bluetooth card reader that will, attach to your phone essentially via Bluetooth and let you, accept a credit card transaction that way. But yeah, will Venmo one day try to sort of penetrate businesses more aggressively and just, have people have an easy and quick and simple way to, pay at the counter or at the checkout with Venmo? Yeah, I mean, I could see it happening. As far as I know, there's nothing in the near term that's going to sort of accelerate that. But we could always be surprised.
Yeah,
Well,
I just ask because I've been asked about those methods of payment more and more over the past, I don't know, 6 to 9 months.
Yeah, the challenge is, well, I suppose there are a number of challenges, but I think from a business owner perspective, obviously, like having a technology that would make it so that a customer could sort of very easily and quickly get to the register and make a payment with Venmo, that's not in place yet, right? Where they would maybe just pull up their Venmo account, maybe get a QR code and like hold it up to the point of sale device, and it would somehow read that and then deduct a payment from Venmo. Like they haven't developed yet that technology or infrastructure. I wouldn't be surprised if there were people at Venmo hard at work on, getting something in place, but as far as we know, nothing yet.
the interesting thing too with Venmo, I was going to just add in there is, some of these smaller micro type businesses that Colby mentioned have been using Venmo specifically a lot more over the past few years. But Venmo has not necessarily been catering to the business clients. There's been a number of people that have been shut down by Venmo for using it for business purposes. Like Colby said, I would be surprised if they're not going to explore that avenue in the future. But previously, they actually were cracking down on business owners using it for business purposes and said this should only be a peer-to-peer type payment. Even though all of us, I'm sure, know many businesses, specifically the smaller businesses that accept Venmo and take payments that way.
So quick question on that. So how can they standardize that? Are they just following through with the payments that they're seeing that there's just an influx of payments coming in, so they decide to stop it?
Yeah, essentially they'll put a hold on the account. They'll see, everybody puts their comments in on what their bank payments. I've seen it primarily in like salons, and that type of setting is where I've kind of ran into it the most, and so Venmo sees the number of payments that are coming into a specific person. They can look at the comments, and all of a sudden they kind of put the pieces together and say, hey, this is obviously business related, not personal just transactions.
And the reason I ask is because Haley could probably speak to this better than I can, but we do some big community events here. And one of ours is our Middletown Pride event, which happens in June. Well, we have gotten an influx of requests for people to pay via Venmo. And, searching anywhere online to try to find where do we do a business account, all that kind of stuff. It's not easy to navigate. Because I don't want to say the youngers, I call Haley and the younger generation, that's what they're used to. Like, hey, what's your Venmo code or what's your Cash App? They're just used to that. They're not, I've just become like where I'm like now, I'm like, oh, I could just go ding on the thing and I love it. So I understand the convenience of, the Venmo or that, but that's pretty interesting. I didn't realize that they actually shut businesses down.
Yeah, I feel like I haven't seen it as much in the last probably 6 months, and possibly since the pandemic, they may have kind of eased up on some of those restrictions.
Yeah.
Or it may just be a timing thing where they've started to transition to allow more of that. But specifically when they started out, businesses were at risk of getting shut down. But there wasn't like a crackdown on it. It wasn't something that was happening all the time. It was just kind of randomly you'd hear about these businesses that got shut down. The other thing that I've also noticed, and just talking with different business owners, nonprofits and some of these other entities, they seem to be much more willing to accept these type of entities and allow them to process these payments. And probably because a lot of them are donations and that. So it's a little bit of a different format than a business, traditional business sense, but yeah, that's kind of.
Do you have any idea what the difference is between GPay and Venmo?
GPay, from my understanding, is just kind of the Google version of it. Google has their kind of suite of a mobile wallet. You can pay with your credit cards or anything, the same as Apple Pay. GPay, I believe, has just added kind of a Venmo type tool that they'll allow you to pay, directly between peers in that format.
Right.
All right. Any other questions, guys? We have the experts here.
I think I'm good. Thank you.
Yep.
All right. Well, thank you guys very, very much. If you don't mind sharing those slides with us so we can get it out to everybody, that would be fantastic, because that has your contact information on the back. So we definitely want to have that out there for them to have as well. This is recorded, so we'll put this on our website too. For those, we had a few people who couldn't make it today, but they are definitely interested in seeing it. So we will put it on our website for them to see it as well. But we do appreciate your time, Colby and Stephen. I know, I don't know what time is it out there right now, 10:48?
Yeah, almost 11.
Okay.
Well, yeah,
Just
thanks for having us. We appreciate it. And I guess I should just add, at the end here, I mean, obviously, if you have any questions about, payment processing at all, and or are looking for, somebody to whether it's a question or whether you're looking for a way to save money that doesn't involve surcharging and cash discount and all these kinds of things we've talked about. I mean, obviously, 9 out of 10 people that we come across that are interested in having us do a free analysis for them on their payment processing to see if we could maybe lower their rates or save them money. 9 times out of 10 we can, and usually it's significant. So we'd be happy to take a look at anybody's, if they want to send us a copy of a merchant statement, and we could put a free analysis together for them and say, hey, here's what we think we could probably save you, and or talk about technology if you're interested in that, and all those kinds of things. We really approach it more like a consultation and less like a hard sales pitch. So don't be afraid to to reach out to us and just and chat with us, and we'd be happy to to give you some pointers and tips and coaching, and maybe potentially see if we could save you some money.
All right.
Thank you very much.
Thank you very much. Have a great day, everybody.
Thank you.
Stay
Thank
safe.
you.
you.